start whenever you'd like, Mike. I have a hard cutoff in 2 hours of my time.
Perfect. Yeah, I'll kick it off. There's more and more people I'm sure will trickle in. But yeah, if you are just joining in, I posted the agenda we'll try and cover today. Um, we wanted to host the webinar for a few reasons. One being we haven't hosted one, I think, in a few months now. And that first one was very, very helpful for a lot of people, current clients, people on the fence. Um, so we figured we'd get one of those lined up for you. And then obviously on Monday with that big Zeus trade, we didn't hide the fact that that was a thing. We posted it everywhere in the losses channel. And we had a few people reach out just, wanting us to address it. We didn't really feel like we should make a huge stink out of it. Instead, we wanted to turn it into something productive, which we're attempting to do so here in tonight's webinar. So we'll address that, and then we'll also cover sort of the upcoming items here on the agenda. If I just pull it up with 2.0, the Quant Link drop, and yeah, kind of where we're at in the ecosystem, where we're headed. And then, yeah, if you are an Elite or ATS client, you have a nice surprise in your TradingView if you haven't seen it yet. So we self-dropped a new script called Q Matrix, and this thing is a beast. I'm sure Travis will eventually touch on it in tonight's webinar, or we'll get a video out as well for it. But it is very, very cool. The default setup is for ES 5-minute chart. So a little bit of a mix up from our usual NQ. So not the same old boring NQ stuff. We'll have a really nice ES script for you guys.
And that was intentional. So in the Discord too, today I will drop ES. I'll drop a 5-minute in Q1. I'll probably drop a ES 15-minute. So over the next like 24, 48 hours, you guys will have a couple different versions of it. So.
And Travis, you have profit and loss data for this going back several years, right? It was forward testing information. It is profitable. Yeah, for years at this point, it's been profitable. So.
Yeah. I've had limited, I've let certain people test it throughout, since going back to 2022. And I've seen it make, 6 figures in a year with very little drawdown on ES using 3 contracts. So.
And yes, this is for elite ATS. All right, so let's start talking. First, we're going to talk about the nature of automated trading, and it's the recent example with the Zeus losses are a fantastic example. And I want to look at this. I want to address this, and I want to address this from 2 points of view because we have, widely speaking, 2 different types of traders here. We have people that traded to cash accounts, and we have people that traded to prop accounts. And we need to address this from the different points of view. And we also need to address this at the end of our session tonight, which I'm really hoping that we don't run out of time. So I'm going to kind of go kind of quick. We're going to talk about prop scaling. I have a PowerPoint slide presentation, and I have scripts that I'll distribute to people you can run in Google Colab to generate curves to determine how to scale into prop accounts, et cetera, et cetera. But we'll get to that in just a moment. So the nature of automated trading, and let's first discuss gambling. Now, most gambling, you go to a casino. I'm sure many of you have been in a casino before. Most gambling in a casino gives the house an edge. Roulette, obviously, the freaking, you call them, the things that you pull the lever on, slot machines. There we go. Most of the games give the house an edge, which means over time the house will win money. And that's great for the house, not so much for the people playing. But the people who play and win money professionally, right? There are professional gamblers. You can go look this up. This is a thing. They play, by and large, one game, and it's poker. The reason they do that is that poker has an element of strategy to it. And if you know the strategy and you're able to stick to it without emotion and without and remaining objective, you win in the long run. So that's how you become essentially a professional gambler. There you go. Now go do it. No, I'm kidding. We're doing the same thing with the stock market. Okay. So what we do is we determine an edge in the stock market. Now you guys are all in luck because I've already determined that edge for you. And that edge for you is the algorithms, which have anywhere from a 75% win rate to apparently Jennifer's new setup, which has like a 90 something percent win rate, which I find very, very fascinating and have been looking at. It's very interesting. So with these win rates, that's really all we need. I'm going to show you in a little bit with prop firms how you can turn essentially a binary outcome of 50% into profits from a prop firm. Okay. So I'm going to show you that mathematically speaking, because most people do not treat the prop firms the same way as they treat the markets. You can be successful as an automated trader and still be unsuccessful as a prop firm trader. And that's because we have to follow the rules, right? We'll get into that. So, what do I mean by following the rules? When we trade automated, we win by exploiting that statistical edge over and over and over again. Now, sometimes this may net us losses. Mostly, it nets us gains. Sometimes the losses are bigger than the gains. Sometimes they're not. It just depends on. It just depends, right? So, what matters is that over time we are successful, and over time the gains outweigh the losses. Okay. So, in order for that to be the case, listen to my words. In order for that to be the case, we have to maintain position size and strategy. If we don't, then we are no longer attempting to exploit the statistical edge. Okay. So if I trade one day with one NQ contract and I take win, 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 and then I have a loss, and I'm like, crap, and I size down to 2 micros, I am no longer exploiting my statistical edge because I have changed the strategy that I am using. Okay. That can go for that can go for anything. It can go with sizing up, it can go with sizing down, it can go with changing the settings following a loss or following a string of wins. Maybe you're like, well, this looks like it's way more successful. I'm going to change my settings to this. That nullifies the past data that you have gathered. And now you are in a new set of data that you have to gather. You don't know if it's statistically significant enough. Okay. So we cannot ever change our strategies. If we do, then we are no longer exploiting the same edge. Okay. So that's something that we have to understand. I'm not saying don't change the way that you're doing things. I'm just saying that resets our statistical edge, right? Hopefully that makes sense to everybody. Okay. Now, that's essentially the nature of automated trading. So let's look at this from a couple of perspectives. Number one, in a cash account. In a cash account, I think my accounts were down somewhere close to 30,000 on Tuesday. It was that we had the loss. Monday or Tuesday? I honestly can't remember. But we had the loss. It was somewhere close to about 30,000, and that's a pretty decent loss. It's not the biggest one I've had, but that's decent. If you're in a cash account, though, you simply see the drawdown on the chart and you continue. If you're in a prop account, most people's prop accounts probably went down below the static drawdown level or your trail stop or whatever it is, and probably blew the account. Okay. And we're going to discuss in a little bit, like I say, we're going to discuss that very particular issue. So we look at this from 2 different ways, right? The cash account trader continues on, right? They just leave it running in the accounts and continue on. The prop account trader has to do something a little bit different, but they do continue on with the same strategy. that underlying principle never changes, because if we do that, like I say, we lose that statistical edge. So let's talk about why certain things do and don't work, because there's a lot of calls for putting in stop losses and this sort of thing. Let's talk about why a stop loss, although well intentioned, frequently ends up degrading the performance of an algorithm. The reason for that is that, very specifically in Zeus's opening mathematics, and it's the original opening from Evo. It's the same opening. It's the original opening from the regular Q Chronos. That is one of the very few opening signals I've ever found in the stock market that has a properly correlated edge to market movement of a particular distance and direction. Okay, so what that means is I see that signal, or the computer sees that signal, and I have a very good chance, in this case about a 75% chance, of it moving a particular amount in that direction. It is very, very difficult to find that opening signal. Okay, now if you are a manual trader, and I hear this all the time, well, I'm a manual trader, and I was sitting here, and I never would have taken that trade, because of X, Y, and Z, which is great. And if you're a manual trader, that's fantastic. The best manual trader in the world is always going to be better than an algorithm, assuming the algorithm is not required to engage at very fast speeds, right? Because a human simply can't do that. If you trade on a 5-minute time frame, the best human trader in the world will beat the best algorithm in the world. And that's because a human trader has something that algorithms generally don't, and that is intuition, right? Not intuition, but it's they can examine all of the variables. They can put all of them into their head, and they can say, okay, well, this, that, or the next thing, and we're good. I know many manual traders that make thousands upon thousands per day and almost never have, thank you, discretion. That's the word I'm looking for, and almost never have a red day. And it's amazing. It's fantastic. Now, here's why this does not usually work with algorithms. The more confluence that you add to an algorithm, the noisier the signal gets, and the more degraded the signal gets. The signals have to be as clean as possible. What I mean by clean, I can't look at 17 different criteria for entry, and I can't look at 17 different criteria for exit. If you do, you start to, well, it's easily demonstratable. Go into Zeus or go into Evo, use one of the winning charts, and slowly bring the stop loss smaller and smaller. As you bring it smaller and smaller, you'll see the win rate degrade. You'll see the profit curve degrade. And the reason for that is that we are not allowing the trades to do what the signal says they are going to do. There are manual traders that open up a trade. If it does not immediately go their way, they kill it, which is great. You can trade like that. You may end up with a 30% win rate, but you can easily be profitable with that. It's a matter of trade management. The algorithm with the original opening is not designed to do that. The original opening is designed for very specifically one thing: where it is going to go eventually. It is not designed to say this is where it's going to go within the next 3 to 5 bars. This is not where it's going to go immediately. That's not what it says. It says this is where it's going to go eventually. And because of that, the algorithm maintains a fairly high win rate, and it maintains a very nice profit curve. If noise is introduced, the signal degrades. This particular signal. Okay. So that is why Zeus itself operates in the manner that it does. Because if the signal degrades either the open or the close, it cannot operate properly. Okay. So that's not to say we can't do things with stop losses. and I'll show you some of the risk management features I'll bring to it, and I'll add this in and let people select it. There is a correlation I've found, and see, data analyzing Zeus is super hard because the signal is very good. It's very clean. It's very hard to pull things out of it that will actually increase that revenue curve. It's amazing as far as algorithms go. So I have found something to cut off the tail risk on a normal distribution curve. They can cut off the tail risk of bad trades, and I'll show you a graph of that. I have a KDE of it that I'll show you in a pair plot. So we do have some of that coming, and in testing, it would have cut those two trades short, and had a much smaller loss on that day. So we will be bringing that, but putting in a blanket stop loss for the previous reasons that I mentioned is not always the solution. It's, like I say, it degrades the signal, and it ruins the chances that the algorithm has of completing the move that the opening signal says that it's going to do. And like I say, it's easily demonstratable. Just open it up and walk the stop loss closer, and as lower numbers, and you'll see what it is. So for that reason, that is the way that Zeus is designed. Now, and here's why I talk about looking at this from a cash perspective and a prop account perspective. From a cash perspective, people, depending on how they have managed their accounts, have now recovered anywhere from 70 to 100+% of those losses if they were following best practices and they didn't change anything. You can look at Mike's examples for that.
Yeah, I'm at
close to them.
72% recovered, and I actually would have been higher, probably fully recovered, had I not turned off yesterday's second trade. I only took the first one.
Right. And that's how it is designed to work. The chances of having more than one loss in a row are extraordinarily low. The chances of having more than two losses in a row are so ridiculously low. When I get two losses in a row, I quadruple the size. Right, that's just me personally. I'll go bigger than the martingale says it's supposed to go, and I'm not recommending that you do that. But that's me personally, because I'm comfortable with automated trading, and I'm comfortable with the statistics behind it, and I'm okay with eating another loss. Now that's also, and that's not also. Let me back up. When I first started trading, I lost a lot of money, like most traders. I One time I remember, I lost $5,000 trading. I think it may have actually been NQ futures. It may have actually been NQ futures. It was either that or options. I can't remember. But I had lost approximately, it's about 5,000 in one day. And I remember sitting on the floor of my kitchen drunk, saying, I'm never going to be able to do this. I'm a failure. I'm never going to succeed. I have failed in this. I may as well go back to what I was doing before, etc., etc. I have been in these circumstances with the losses. I can say that one on Monday was not my largest loss ever. I think my largest loss ever was probably playing Iron Condors. Those of you that played options are familiar with what an Iron Condor was. Play a lot of options, but the thing is that through all these losses and all this trauma I sustained, yeah, past, I learned that if my strategy has that edge, and I stay the course. Eventually, I come out the other side, and I'm in profit. Eventually, I'm in profit. And what I did, and again, I cannot give anybody financial advice, so this is why I say what I did. I traded until I was up a particular amount, and then that becomes the new balance of my account. And I think Travis was talking about this in the meeting with us yesterday. You want to play with house money, right? So if you're in a cash account, now again, I'm talking to cash account. We will discuss prop. If you get X amount of profit, the rest comes out of the account. Whatever's in there, house money, that's what we play with. And in this case, I have no emotion anymore tied to that money. So I can set it on fire and I will be okay. Now, this is not as easy when you are not yet in profit. And I fully understand this. I understand that clients who may have joined in the last month, the last 2 months, may be in the red. Even after the wins, you may still be 30% or so in the red. I understand that. That is not lost on me, and I have empathy for that position because I have been in that position. My advice, if there's a lot of emotion going on, and this is what I recommend in my previous webinar, I try to link every ATS client to it. I send them a link to it. It's the previous webinar. I suggest get into a demo and watch the losses or the wins until you no longer feel emotion. And when the emotion is purged from us, that is when we become very profitable. We have to get rid of that emotion though, because trading is only that statistical edge. And we have to follow a very particular set of rules. And if we deviate from our rules without the experience to know when to deviate from rules, then we will nearly always fail. Now, notice I say without the experience to know. I have enough experience at this point to know I should pause this for this news event. Or I have data that says I should pause this for this news event. Or, hey, I had 2 losses in a row. I know that's very statistically unlikely. Let's go ahead, right? I have data and I have experience for that. If you don't have those sorts of things, then you have to rely very, very strictly on rules, and you cannot deviate from the rules. So I have been in that place where you lose so much money that, I mean, you might as well just start crying. Like you doubt your self-worth, you doubt if you can do it or not, you doubt everything. And I've been there. Thankfully, I have a wonderful wife who always believed in me. And if it wasn't for her, I would not be who I am today. That's guaranteed. I hope there's somebody in your life that believes in you the same way. And if there's not, that's what we have this community for. Because I believe it. That's why you're here. Everybody can do this. Everybody can do this, and that's why we try to create the education necessary, and we create the why we've taken steps to try to create the environment. We've taken a lot of steps recently to try to better the Discord, and we've tried to increase our customer service. We've brought more people on board, and we're going to bring more on board and try to make this better and better. It's the meme coin fiasco. It's always the meme coin, right? Um, and that's the community that you can lean on. So that's where we all are, man. And everybody's here trying to do the same thing. I can look at this and have that kind of robotic response, and I sound kind of like a robot when I post. promise you I'm not actually a robot. I'm a real person. I'm here. I'm talking. I'm not ChatGPT. But the reason I can have that unemotional response is just the fact that I have endured so much trauma that it no longer phases me. And that is only experience. So that's my advice and my input on dealing with the ups and downs of automated trading. And goes for this goes for prop accounts as well as cash. That doesn't change anything. So yeah, so I wanted to share all that with all of you. All right. It's a little emotional for me remembering the years that I went through trying to learn this. Was not born knowing how to do it. All right. So that's a discussion of the nature of automated trading and the fact that if we really want to do this, we put our heads down and we do it, and we learn it, and we put everything into it, and we just get through it. That's what I got as far as that's concerned. Okay, let's move on to other things. Let's move on to some upcoming items. Let's talk about ATS 2.0 that's coming out. We'll talk about NinjaTrader that's coming out with Evo. So a lot of people asked, and I've heard, well, for a long time, we weren't going to port anything to NT as far as the ATS algorithms went and everything. We decided to do that because the TradingView delays have seemingly worsened for most users over the last few months. I never used to get. You guys are welcome. I never used to get the delays that I'm currently getting in TradingView. So because that has gotten significantly worse, we had our resident NT coder Austin porting some of the stuff over, and it looks great. As far as I can tell, it's a direct copy of it's a direct copy of the stuff from TradingView, except it works properly without the delays from TradingView. So it should work fantastic as far as I believe. And everything.
Today was the first day I ran it into a live cash account, and it performed excellent using the new Evo Bear layout. I know everyone's getting a little squirrely crazy on that release. That is coming soon, but yeah, Evo's looking fantastic on NinjaTrader, and Zeus as well has performed. Austin had shared a stat comparison of the speeds and basically how much a delay would cost you, and it was like a few hundred. It's almost like $300 on I think relatively small position sizing. So NinjaTrader is going to make a big difference for those ATS algos, especially a setup like that Evo Bear where it's super quick action.
Yeah, that's a good question there. Quantor, porting everything over to NT, maybe.
Austin's reaction when I said a matrix, and he was like, what? He was like,
I don't want to code matrix, bro.
Yeah.
Oh my
So
God.
that one would probably take a while. That one's not going to be an easy one, if possible.
The script is still running. We're at 50 minutes now on the script, so people are still getting access to this. So yeah, it might still be a little while. Yeah, we don't actually want to say the word squirrel anymore. We're gonna glance over that. All right. So yeah, once that comes to NT, that's gonna be a big game changer for some of you guys. That being able to take Evo and QZeus over there. QZeus already being out, of course, as you guys wait for ATS 2.0 to come out. Now, what's going to be the big difference between 2.0 and NT. That's simple. The execution would probably be just around as fast, probably be about the same speeds. But the difference is that 2.0 has access to exterior data. So I can have it interface with other machines doing other things, and it can say, hey, our machine learning model has detected that this is going on. This is a problem. Respond in this manner. And that's going to be the big difference for that. So it's no longer just that sort of static, no longer that sort of static mathematics behind the scenes. So even though the mathematics themselves, this is why that original opening in Evo, Q Chronos, and Zeus works so well, is that it's actually self-adjusting behind the scenes. So it adjusts to the movements in the markets. That's why it works so well, and it works over such a long period of time. And expanded opening is based off of a derivation. Oh, the script finished there, so everybody should have access to Matrix. The
Real quick, I'm gonna
Yep.
step out, and guys.
Okay, very well.
Yep. I'll be on my
All right.
phone, so
Okay.
I'll be able to still chime in.
All right. See you, Mike.
All right. Yep.
So the expanded opening itself is indeed a derivation of the original opening. They're very closely related. There's mathematics behind the scenes how they interrelate, but they're very closely related. And expanded works best to find scalps inside of a trend, and that is what that is what Jennifer found when she put her layout together. If you have something that controls the overall trend, expanded is going to find those little pullbacks inside of it. That's what it excels at doing. So I'm also going to make a version that is volume oriented as well, that does the same thing. I've already done the code. I need to get it deployed. Anyway, so that's what's coming for NT, and it's mostly completed at this time. I believe Austin's finishing some of the always in code, if I'm not mistaken, but it's almost done. We're almost there with it. Upcoming features in Quant Link. We'll discuss this. We have some features that are upcoming. We today started the work on polling accounts. What does that mean? Polling accounts is something that we have to be able to do, and that's poll, P-O-L-L. We have to be able to speak to the remote account and say, hey, buddy, what positions do you have right now? Or what is your current profit and loss? What's going on? So the reason risk management and leader, follower, copiers tend to be so laggy is poll delays. So it has to wait an interval of time to pull the remote account, right? So it waits 1 second or 2 seconds, and it says, hey, what's there? And it waits a sec. Hey, what's there? Right? And in between those intervals, things can change. So if it's moving very rapidly and you have a profit target on it, it may miss that profit target, right? Because it hasn't pulled the account. And that is why those things tend to be laggy, and they tend to not be as accurate as you may think they should be. So one thing that we're trying to deal with, and for Tradebait, this isn't that big of an issue. Tradebait's API actually, I'm going to give this to the devs in the audience. Tradebait's API actually provides a WebSockets connection, and we may be able to use Fargate containers to instantiate a WebSockets connections for everybody that wants to use features that will require polling, which would mean that there's virtually no lag on it. Because in that sort of connection, the remote server pushes the information to us rather than us asking it. So it's a little bit different. It would be much, much better than any other copier or risk management on the market as compared to other companies. So if you go and you use TradeSyncer, for example, it has these risk management features, or it has these trade copier, leader to follower features, but there's a lot of lag involved. And that is honestly, it's a That's a feature of cost management. So I understand why they do it. It's a feature of cost management. Every moment that somebody is using it, it costs gigabyte per second time in AWS, and it just gets expensive. You guys are seeing that with us having to charge. There's just no other way around it. We have to, because it's expensive. So we're trying to figure out how to do this in a manner that's going to be cost effective and will provide the performance that people want. I'm not going to release a half baked or crappy product. So anyway, that's one thing that we are working on currently, is figuring out the polling concept and how to do this. And when that is done, we can implement risk management, which includes daily loss limit and daily take profit limits. And we can also introduce leader follower copying, which again is something I've railed against because of those issues. So if I can solve those issues, then it becomes something different. The other thing that we're bringing is manual trading, and this goes into the risk management category as well, because everybody wanted risk management, and I believe manual trading was the third option. Manual trading will allow you to trade into any or all groups simultaneously, so you can flatten positions in all groups, for example. You can buy in all groups, you can sell in all groups, you can do what you want. So those manual trading options are going to come as well. That is a focus that's coming, which, yes, it will include the flatten all feature, but it's going to be bundled with the manual trading, because it's useless to try to develop it without just putting it all together in one module. It's silly. So that's what we're doing there. That will come first, and then any features that require polling will come second. And those are the next two things that are coming. We do have the ATS 2.0 container launching stuff, and I put a picture. I put a picture of it in the member announcements. I think it's nothing incredibly special at the moment. The charting software, we have it where it can stream live now. You can go into a second page for it and conduct a back test, and you can save the settings for the internal strategy. Once you save the settings for it, you then go into Quant Link and you launch the container. I'm going to put those into our staging environment fairly shortly, and then hopefully tomorrow, and then staff will be able to play with that to their heart's content and attempt to break it for me. So that is where we are with ATS 2.0. We are not long away from a customer beta. I just want to give staff a chance to break it and tell me where things are needing to be fixed. I see that there's like 1,000 questions over here, guys, and I'll get to them in a moment. So that, anyway, that's where we are with that. The only thing that is not going to be ready for beta with 2.0, strictly speaking, is the backtesting capabilities. And that is because backtesting is a tricky thing to get right. It's a tricky thing to get right. I can take the module, I can run it tick by tick, I can run it candle by candle. But if the module takes 30 milliseconds to process and there is 50,000 rows of data to go through, I'll do the math. It takes a very long time to conduct that back test. So what I have to be able to do is take the calculations on the fly, vectorize them, and apply them to a data frame. And I have to be able to do that in such a manner that it is not pre-coded in that way. I can do that. I can write a code module that will backtest Zeus. But what we're trying to do is set this up for the future. We're trying to set this up in such a way that in the future, users will be able to write their own algorithms and perform backtests on them in the same manners that we perform them on our own modules, and clearly a custom coded backtest piece of software that is separate from the main algorithm module is not going to work. So we have to code that still. It's a little tricky. And if anybody is a dev and they understand what I'm talking about, then it's a little tricky. But we'll get it done. And then that way, that will directly open the path to people being able to build their own algorithms out with our systems and access our internal data endpoints and be able to use them for the things that they want to use them for, which many of you may not be interested in, but I know a lot of people are. So that's what we're looking at with that. So bottom line is that the ATS 2.0 customer beta will be available within a couple of weeks. I think it's going to be dependent on how well staff can break it and how many breakages there are. But it really should only be a few weeks. You will be able to trade with it. The chart will show you what's going on. Like I say, backtesting will not be immediately available though. So it's probably only going to be people that are power users, so to speak. They're going to want to use it, but it will be there and available. So that's where we're headed with that. That's the approximate time frame to be able to actually trade with that software and conduct the software. Or conduct the trades. Okay, so now I am going to answer any questions on 2.0 and upcoming features for Quant Link. If you guys have any of those, let me scroll up over. I'm sure you guys have these. You scroll here. Let's see. After ATS 2.0, the monthly fee available for everyone, even current ATS members. So I'll explain quickly the difference in the price for Quant Link and the price for the ATS 2.0 maintenance fee. Quant Link was never intended to be a free product. It was intended to be paid for with the ATS 2.0 maintenance fee because it requires ongoing costs, so it has to be paid for. It's intended to be paid for with that fee, which currently we expect to be $149 a month, and that's why it's wrapped into it. Prior to ATS 2.0 being released, and that being the case, we've offered it to everybody for the lower price of $99. Whether you're ATS or Elite or Pro, or you're not even a member of QuantVue, you can buy the software, which was intended from the beginning. So that's the difference in the pricing. And yeah, after ATS 2.0, then obviously you'll be able to wrap all of that together. There will not be an option for just ATS 2.0 without Quant Link. That won't be a thing. It will be a blanket $149 cost. Any info on Chronos versus Matrix? You're gonna have to wait for the video that's gonna come out. Matrix is a beast, and yeah, it's a beast. Will NT be the future platform of choice? The future platform of choice will be ATS 2.0. However, if one does not want it, use NT. That's fine. Wouldn't integrating exterior data 2.0 result in the lack of clean signal which impairs statistical edge? It's a good question. It can. So when I make changes to the algorithm, normally my changes are extraordinarily small. The data that I used to, I have to show you guys the chart, that I'm using to implement a new stop loss feature in Evo and Zeus. I had to cut out just the things at the very end of the tail to avoid any sort of overfitting or any sort of degradation in the signals. It is a very, very, very tricky thing to get right and maintain the edge and not overfit. So the question is, yes, it absolutely can degrade it. It absolutely can degrade whatever you're doing, if you're doing automated trading. The question is, how do you do it right? And avoiding overfitting, there's really good key principles to avoiding overfitting. But when I make the changes, uh, I cut out usually tail cases and not closer to the middle of the distribution, because that starts to invite overfitting. So that's generally what I do, and it's generally been successful. And I don't know if that answers the question or not. Let's see here. Chatter about using gamma or gex levels. Yeah. What I want to do is bring a gex dashboard of some sort into the Quant Link dashboard, where it will display the levels of the market and what the gex is at each of those levels. It's a very, very useful tool. If you don't know what I'm talking about with gamma exposure, I don't have time to explain it, but just you can look it up. You can look up videos on it. It's a very fascinating Greek to read in the options chains, which can clue you into the movements of institutions. And frequently, the levels have a very high correlation. Now, here's the thing: support and resistance. Okay. If you look at support and resistance on a chart, there is no magical reason that works. No magical reason. You can look at Fibonacci numbers on a chart. There is no magical reason that Fibonacci numbers work on the chart. Do you know why they work? Because people expect them to work. It's a self-fulfilling prophecy. That's what support and resistance is. That's what Fibonacci's are, et cetera, et cetera, et cetera. But with GEX, we're actually seeing the movements of the big firms and their levels that they're looking at can be derived from these things. So it's much more in-depth information than just simply a self-fulfilling prophecy. So yeah, that's why I like those levels. I think they're very, very interesting, and I think that we can use those. To help inform our algorithmic movements and trades for days. So yeah, and well, that leads me to another point as well. This goes back to signal degradation and overfitting. There's nothing that says all of these items have to be implemented into one algorithm or strategy. If Zeus works perfectly well as is and we cannot improve it, then I will not improve it and I will not add things to it. These things can be used to create additional strategies. Eventually, my goal with the ATS 2.0 system is to have a library, I suppose, of various algorithms, each with some sort of weighting of which market regime, which kind of day it is, which kind of hour it is, that says, hey, this one's going to be most useful during this time. And the model can look at it and say, okay, this one has the best score for right now. Boom, let's activate it. And put it on the chart. Or, well, the internal chart, right? Because it's an algorithm. But that's kind of the end state of it. So when it comes to bringing in these additional items, it's not necessarily all things that I'm going to pile into Zeus, ready? It's just things that can be used to do things. Okay, let's continue. You're welcome. Do you plan to scale 2.0 better than TV? Yeah. I don't know what the infrastructure behind TV is. I have no clue. But we built the infrastructure of ours from the ground up to scale to infinity. To overwhelm our tech infrastructure, you would have to break AWS to overwhelm our tech infrastructure. So that's how it's built. I built it from the ground up to take thousands and thousands, thousands of users. If we got 1 million users, it'll be fine. Probably going to annoy AWS a little bit because they're going to have to like shift resources around, and we're going to have to get approved for all sorts of stuff. Blah blah blah. It's going to be a thing. But at that point, it's a good problem to have, and we can afford it. But it is built from the ground up using the best cloud architecture on the planet, and I don't care about Azure. I'm AWS all the way, and you devs can just deal with it. All right. I do remember mentioning that ATS 2.0 trade meets certain criteria, it would stay in or extend the TP. Yeah. So staying in and extending take profits is something that, like cutting losing trades, is something that has to be done very, very carefully. So what I got to do is look at those edge cases. Hey, in what quadrant of a scatter plot or a pair plot or whatever do I see that every one of these trades is nailing it? And then what we can do is say, okay, well, trades that fall in this like little 10% tail that we see do this every single time without fail, then let's extend it on those. So that's what I have to do with it. It's a tricky process to not become overfitted with that. So again, that's something that we were looking at after the risk management portion of it. It is something that is coming now. So I discussed flatten all. You guys are just like piling messages in here one way up the list. So we update NT. Go to the NT training channel. Will you have access to the OG version? Yes. Anytime I make a change in the algorithms, I make it as such that you can retain the previous settings. Can you guys work on the setup and trading videos? Yes. There's a guy that just records videos. In fact, just edits videos. But we record stuff all the time. The reason that things tend to get behind is because we do not stop innovating. So I make something, I make it work, and like a month later, we develop something better. And then a week later, we develop something better, and we improve, and we improve, and we improve, and we never stop. Because if we don't stop improving, training videos naturally kind of fall behind, and I apologize. That's something that we definitely do need to get better about. We have put emphasis into getting better about this. We have been making changes. New people are coming in. They're starting to get different onboarding experiences as we try to get better and better and better. That's also a process of us just growing and scaling as a company. Like, man, when I started working with Mike, like we had uh, like well under like 100 users, and today we have well over 1,000. So it's just this huge growth that we're dealing with, and we've never stopped innovating the whole time. So every now and then it's like, okay, there's been so many changes, now we have to go do another video. Like we just need a full-time guy who makes videos, and that's like all he does is just makes an educational video every single day. And Travis, want to do that?
Well, hey, I mean, it's hard too because it's like we're like, for example, you're the best person to make a video on Zeus because you made Zeus, so you know more about it than I do. Versus same thing with Matrix. It's like I'm the person that should make the video on it because
Right.
it's like I know the most about it because I made it, right?
Right.
And so it takes time away. It's like, I mean, I spent just saving previous optimizations to share with you guys for Matrix took me. I literally worked until probably like 2 a.m. just doing that last night. Just take the screenshots and then so I can go back today and recreate all those charts and share it with you guys. So and then do the video after that.
Yeah.
So it's just everything in sequence, and yeah. But try and get better at it for sure.
Yeah.
Try and find the time to do it too.
It is definitely an issue. It's one that we're acutely aware of, and it is something that we have put more resources into. It is something that we will continue to improve. So, yes, there you go. Waiting to finish risk management before releasing 2.0. They're not if or they're not one after the other. They're being done simultaneously. Considered position scaling in Quant Link. Yeah. So when we do the account pulling features, stuff that requires that, we'll be implementing scaling features, since that's it's part of the same code that we're going to be working with, so that you can go into your group and you can say, okay, this group gets ×3 or whatever. So yes, that will be in there. I know a million people have asked for that. It will be in there. Dynamic, yeah, so like dynamic scaling, yes. So there will be stuff like that, guys. It's time. It's just time. Um, all of the features that you want. Hey, great. It's going to take me a week to do this. It's going to take me a week to do this. It's going to take me a week to do this. It's going to take me 4 weeks to do this. It's just time. So the answer in general to have you considered this? The answer is usually yes. The answer that's a no is, do we have time at this moment? The answer is no. Will it eventually be there? Yeah. Eventually, this is going to be the greatest trading product on the freaking planet. And you guys have already seen how much it develops. I'm not going to stop. Our team's not going to stop. So yeah, I mean, eventually, pretty much everything that you would want is going to be in there, and you're going to discover a whole bunch of stuff. It's like, man, I never thought of that. It's awesome. You're going to find in there. So that's usually going to be the answer. Let's see. Oh, that's a good question. Will Evo be released with 2.0? We're going to just be starting the beta with Zeus. Eventually Evo will make its way in there. Let's see. Yes, you'll be able to write your own code. It will all be in Python, so you will need to know that language. But eventually I will provide documents and examples. You can code your own algorithms and run them in 2.0. And again, using Python. So, do you see Schwab being as, yeah, absolutely. Schwab is more reliable than TraderView, in my opinion. Future development, be to support NT or TEV. Both, I think. Probably both. If we keep developing on one, we develop on the other, I'd say. Because we've got enough people, I would say. Correct in saying I can use 1.4 for some props and signals come from 2.0. Yes, we'll be able to use the signal generation 2.0 for both. Gamma, I've already talked about. If I have 20 Apex accounts, I'm okay only using, yeah, you can use QL. Initial release. Yes, it will be slightly different than the current Zeus. So what will be the total cost? I don't know what you're asking about. All the tea in China? Yep, here, blah, blah, blah. More information regarding the roadmap of integrating additional brokers. Schwab is next. And then probably going to add Rhythmic connections in. And then, I don't know, let's throw a dart at a dartboard. I'll probably run another poll or something. Let's see. Not want to use, what should I do to unsubscribe from Quant Link? You can go into the dashboard in the billing section. You can hit cancel. And if that doesn't work for you or you can't find it, just email hello@quantvue.io. What is Matrix? I just tuned in. Bro, you don't know what the Matrix is? Come on, watch the movie. You please repeat charge for 2.0 and Quant Link. They're both included in the 149 maintenance price. Okay. So, trying to scroll on through here fast so we can get to the next part. Timeline on doing Gex stuff? No. It'll be done when it's done. Prop firms do not care where the automation comes from. It'll all be marked as automated. So use a firm that allows automation, in my opinion. Let's see. I want to get to the next section here because I know a lot of people want to hear it. A chance QL would ever expose developer AIs to be able to see trading account information? Yes. It's a good question. I know you're a dev, Geekzilla. Yes. It is my intention to expose as much information as I can internally. We have to be careful how we do it and manage the security concerns. But it is my intention to be able to expose as much as we can. So if I can do so in a manner that is still secure, then I will. That's what I have on it. I'm going to build it as though I was going to use it. So therefore, I'll have access to everything that I would want access to. So yeah. How to make money on prop firms using. We're going to talk about prop firms. I'm trying to get through all this. All right. Matrix looks wild. Yeah, if you haven't looked at it, go look at it. Let's see.
There was a question about if people get Quant Link yearly, how will that be prorated if they upgrade into ATS 2.0? And I was like, we'll figure it out, I think.
Oh God,
'Cause
yeah,
that's
we'll
not
figure it
something,
out.
yeah. It's something we will do. We will
We will
prorate
do.
you,
Yes.
but we haven't got that far yet.
Yes, we will do. Promise. Damon, updates or new feature sets on the manual trading side of the house. Yeah. So like I say, Quant Link is coming out with manual trading capabilities, and I want to include a full depth of market with it. I would love, 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 love with Data Bento Stream as level 3 data, just to put a freaking, bookmap clone, right? I'm not going to copy bookmap. I'm not going to steal their trademark. So we'll do a visualized depth of market graph along with it, right? I would love stuff like that. So yeah, no, there's absolutely stuff coming for the manual side, and then uh, there might be more stuff coming for TradingView Red T. We'll see, but it's definitely not something that we're looking to stop development on. That's not happening. We will continue to support our manual traders since we know so many people do manually trade. Please comment about algos and Apex rules. I would recommend reading Apex's rule set for that. I'm not an Apex expert. Can you run Matrix and Evo at the same time? Yeah. Just be careful about overlapping time streams and accounts, or time frames, accounts, and tickers. Let's see. Today I learned Travis is the shadowed guy. Yes, he is. He's the guy that never shows his face, except now he'll show his face. You ever considered partnering with Tesla? Maybe that'd be dope. I'd be down to meet Elon. It's 2.0 time frames. Yeah, I mean you can use the same settings on it. I'm just trying to go through here kind of quick so we can get on. Where's your hammer? I don't know, man. Tell me. Okay. Let's see. Uh, Neo M Quant. On the fence to upgrade from Elite to ATS. Is the new bear strategy doing well? And is it worth upgrading to ATS? I don't know. You guys tell them. I think it's doing pretty well. You guys tell them. Let's see. Okay. So let's move on. We've spent a lot of time here. Let's move on. One moment. If you all will bear with me, I am going to need just 1 minute. We're talking for a little over an hour, and I will need about approximately 1 minute here off screen, and then I will set up the PowerPoint and we'll get to it. So if anybody needs to grab a drink of water or use the restroom, now is the time. We will reconvene in approximately 1 or 2 minutes. Okay, let's take a little break for a second. All right. Hopefully, you all have gotten a quick little break there. You have checked your Tinder. You have checked your Facebook messages, and we are ready to go. Let me change screens. Okay, we're going to discuss prop firms. First, I'm going to give you guys a sermon.
I don't see anything on the screen.
I'll share in just a moment. So first of all, I'm gonna give you guys a lecture. Can you mute yourself there, please, Travis? I can hear myself. Okay. So good. I'm glad your OnlyFans is doing well, Mr. Marvish. Mine is as well too, although it's mostly pictures of me at the gym, but nonetheless. Let's discuss prop firms. How do we use prop firms properly? It's an interesting topic. Prop firms are not cash accounts. Prop firms are not trading accounts. That makes sense. What is a prop firm then? What is an eval account? An eval account should be thought of as a chance to get a payout. An eval account is a chance to get a payout. Okay, it's nothing else. It is a statistical chance for me to get X amount of money before it blows. Okay, that's the way that I look at them. Now, if you try to trade a prop account, and see, I'm going to be giving some advice in this. Excuse me. I'm not going to be giving advice because advice is financial advice and I cannot give advice. What I'm going to be doing is presenting mathematics that, when exploited properly, can ladder prop accounts and get payouts even if they're blowing. Okay? I'm going to present mathematics that can do that, and I will give you the tools to find them yourself. I have a couple of scripts written that can generate the information that you will need to know. Okay? So some of the information that I'm going to present here is not a best practice for cash accounts. It is not a best practice for cash accounts. If you do not want your prop firm to blow, these are not best practices. You must treat it as a cash account. What I'm going to talk about is exploiting prop firm rules. What I'm going to talk about is using the edge that they give you. Okay? What's the edge that a prop firm gives you? The edge is that your losses are limited. That's why I like trading options. With the exception of two positions, it's selling naked options, selling a naked put or naked call. Your loss is limited. And don't never sell a naked call if you do. A put actually is still technically limited, but the call is not. So in options, if you buy, for example, you buy a call option, my loss is limited to the cost of the call option. Okay, but it has unlimited upside. That is the same as a prop account. The cost is limited to what I have paid for the eval. That's the limit of my financial liability. The upside is virtually unlimited until they decide that you've taken enough and they move you to a live blah blah blah. We're not going to discuss that. Okay, we're going to look at it in a very very simple frame of reference. Okay, so with that in mind, I treat them as, and again, I'm going to talk about what I do. I'm not going to give you advice. I treat them as options. I bought a call option. This is a trade. I am going to hold that call option until it either dies or I take profit. Okay. When I used to trade options, that was the way that I traded options. I would set the money on fire, and that was it. I'm ride or die, man. Because I was a swing trader. I was trading swings. With the exception of like some zero DTE, SPX and stuff, I would always swing trade. So I was ride or die, buddy. If it dies, it dies. Okay. It's the same thing with a prop firm account. If it dies, it dies. I don't care. So the question becomes, how do we use that limited financial liability, which is our edge, to exploit the rules and become successful? So let's grab, I made a PowerPoint. Grab just a second. How's the show button? There it is. Oh, Lord, that took my whole screen away. Sorry. Share your screen. Applications. Okay. You guys can see this, yes? Oops. Oh, I end the slideshow. Can you guys see this? Okay. All right. Awesome. So let's talk about prop firm expected value tables. Okay. We're going to be talking specifically about static drawdown, and we're going to be talking about a 50% win rate. Let's first define what we mean by win rate. Okay, this is very, very important when we look at statistics like this. All right, so let's look at trials versus trades. Wins refer to the successful conclusion of a Bonelli trial. Okay, what that means is it is a set of events or one event or whatever that leads to a binary outcome. All right. So our binary outcome in this case is pass or fail. Right. So when we talk about evals, the binary outcome is a pass or fail, or the binary outcome is I get to $3,000 in a day, or I don't, or I get there, or I blow the account. So for the purposes of these tables and statistical modeling, this is what we are discussing. Okay, so when I say a win, I am not discussing a individual trade unless you are sized as such that that individual trade can pass an account in a single trade, or maybe two trades. And I'm going to explain what I mean. Okay, which is certainly possible. You can size in that manner. But that's potentially would not lead you to your 50% chance of getting that binary outcome. Okay. So a trial is a discrete and independent event that can be labeled with a success or failure outcome. It is not a single trade, but can instead be a successive series of trades. So, for example, we could say a trial, in this case, a Bernal-Lee trial, refers to perhaps an entire day of trading with Evo Bear. Okay, we can use that as perhaps an example. Trial for our purposes can either be a single trade, self-contained time frame of trades, e.g. 1 day, or a particular number of trades, e.g. 10 trades. All right, so hopefully that all makes sense. For our purposes, a system with a 50% chance of passing in a day is mathematically equivalent to a 50% chance of gaining X value in one trade to pass. Okay, so if I need $3,000 to pass my eval, then passing in a day is equivalent to making 3,000 by the end of that day. That should make sense. Okay. Model assumptions. Per trial win probability is 50%. Okay, it's a coin flip. Now, most of our algorithms do better than that. But so you can look at, now here's where it gets a little bit tricky. Is that you have drawdowns throughout the day, right? There are some prop firms like Apex that run unrealized drawdowns, and that is a significant issue. It's a significant issue. I am of the mind of having a static drawdown because then that way, the more I trade and I'm in profit, the further I am from blowing that account, and it makes it passing it much easier. Okay? It's my personal philosophy with it, even if the account itself costs more. And the account that I'm using for this is the Blue Sky 200K static, which as of the time of this recording costs $154. Again, that may change in the future, of course, but that's the account that I am referencing as we go through this. So a win, again, that means we achieve the goal of X. Okay. X is a dollar amount that changes based on leverage that we are using. Okay. So if I need 1,000, right, I leverage to get 1,000 at the end of my trial, whether the trial is 3 trades or whether that trial is a day. Okay. Or if I need 6,000 to pass, like with the 200K, then I leverage to pass with $6,000 at the end of my trial. Okay? I want to maintain that 50% pass-fail rate. All right? And again, this gets clearer as we go along. Okay? Each required and successive trial requires 2 eval attempts on average. Okay? So if our eval phase requires N to E, winning trials to pass. Okay? So in our eval phase, let's say we have a 50-50 pass-fail rate in 1 day of trading, that will, on average, require 2 eval accounts to pass because one of them is going to die. Assuming worst-case scenario, the first one is going to die. Okay? Payout phase requires N to P winning trials to reach a payout. Now, a payout phase is usually going to require more winning trades. To get to. Evals can be passed fairly quickly, often because of less rules, or in some cases there's it's lower dollar amounts, that sort of things. Depends by the prop firm. So payout phase, I in general assume is going to require more trials to pass. Yes, it will. It is indeed recorded. Travis is recording. So when you're in the payout phase, we are assuming the first trade in the payout phase after passing eval is a fail. The second one is a win. And that is how we assume this whole thing. We're assuming worst case scenario, killing the first one in your coin flip. Okay. Total winning trades required from fresh eval to payout is essentially N to E plus N to P. Okay. Blue Sky 200K example is what we're going to be using, with an eval cost of $154 per account, payout per completed cycle. Target is $3,000 per completed cycle. Okay. Mathematical framework. What we're looking at here. Hey, get out of there. So for a trial, 50% win rate, already told you that it's going to take 2 evals to pass. I already showed you guys this. It's just kind of re-summarized here. Okay. Now, let's talk about what this is actually going to need. Okay. If we assume that per trial we have a 50% coin flip, okay, and bear may actually be better than a 50% coin flip, depending on how you leverage your positions. And again, I have a calculator that I will provide. Depending on how you leverage those positions, you may actually be better than a 50% win rate. But we're just going to assume that. So on the side is the number of eval wins required to pass evaluation. On the top is the number of payout wins required to get to a payout. Now keep in mind, we are targeting a $3,000 payout. So all of these numbers will have to end up being less than $3,000, or we're not making any money. That's how we have to look at this. Okay? I do not care if an account blows, because it is just part of my strategy to exploit and extract money from a prop firm. In order to get to the point where I'm extracting money, I will kill evaluation accounts. That is plain as day. Okay, so if we have 2 evaluation wins being required and we have 3 wins in payout, to get to that payout, that's going to require a total of 10 eval accounts. What is 10 times $154? That is $1,540. And that brings you to a $3,000 payout. Okay, now let's continue looking. Expected eval cost. Okay, here's our expected eval cost. All this is the previous number times 154. Okay, and again, this sort of thing will change depending on the exact account that you have, right? But this is just my particular example. I am not suggesting you have to use this exact account. I am not suggesting you use my exact framework. I'm just showing you this. Okay. This shows you the cost to get to, on average, assuming a 50% Bernoulli trial pass fail rate, so a coin flip. This shows you the cost to get to a $3,000 payout if you are sized to get to that inside of the coin flip. Okay. So if we are sized properly, 2 eval wins, 3 payout wins will cost us approximately $1,540 in evals to receive a $3,000 payout, which means we net just under $1,500, right? 1,460. Okay. We can look at the next slide, which is exactly what that shows. It shows the inverse of the previous slide. This is what we're looking at, seeing how many wins it's going to take to get to that point. Okay. You can see even under pretty horrendous circumstances, we can still get to apologize for the dog. We can still get to profit even if it's low. Now here's the thing: if we do this right, even if we have low profit, who cares? We're still profiting at the end of the day, right? What's 500 into 3,000? 2, 3, 4, 5, 6. So it's 1/6, right? Those are great margins. Go run a business, go run a brick and mortar business and try to get those margins. Okay? It's great margins. All right. Now let's look at the final part of this. And I'll show you the calculators in a sec. Given the strict 50% win rate per trial, the structure can still be a positive return on value, and that's estimated value, evaluation value, expected value. Expected value. Okay, so even if we are having a coin flip in our wins, we still have a positive EV, even taking 3 times to get through eval and 5 coin flips to get through payout. We still have a positive expected value when we look at these things as essentially coins that we're tossing. When we look at them properly in this statistical framework, rather than trying to treat them as a cash account. Okay. Requiring more winning trials in either eval or payout phase increases expected eval usage and cost. So if you are running, and again, this part is not a best practice for a cash account. This is not best practice for an eval account or for a funded account that you want to keep and treat as a cash account. Okay. Requiring more winning trials in either eval or payout phase increases expected eval usage and cost. So what does that mean? If I trade 1 micro and it requires, say, 15 winning trials to pass one of these things, that massively increases my expected eval usage and cost. And again, so those of you that are saying, well, you talk about sizing this, that, and the next thing, I'm telling you, these are not best practices for cash accounts. They are not best practices for somebody who wants to run their prop account like a cash account. This is how I exploit prop firms inside of this statistical framework. Okay. So the less winning trials required, as long as I can maintain a 50% coin flip, the better, the more money I'm going to make. Okay. So the lower end to the E and end to the P values produce higher net profit per payout sizes. Okay. This framework allows comparison to the top firms, apples to apples basis, right? You can kind of look at it like, I'm sorry for my dogs down there. They're upset. So let's look at, give me a minute. I want to switch my screen. 1 sec. And yeah, no, actually, I don't generally trade with prop firms. So that's a good point there. Weird, whatever. I don't actually trade with them a whole lot anymore, but this is how I used to. And it's a solid method and a solid statistical edge. And you can look up online. I am not the only one that does this. Exploiting prop firms um, with a manner like this is a very commonly used framework. So let's see, give me one moment. I have to close a couple of things and then I can show this to you guys. That was like the gotcha comments. Those are funny. All right. Okay. Let me share the screen now. Oops. My headphones turned off. Share your screen. All right. Nothing else important on my screen. Should be sharing there. All right. So let's look at this real quick. Win rate, 50%. We're going to run 10,000 simulations. Eval cost, we're assuming 154. Payout amount, we're targeting 3,000 required payout wins. We're targeting 3. This is targeting 1 trade to pass eval. You can get in here and you change the code around if you want. But we can run that. And we can see here what's going on. So if we're on that, what I just said above, we're there on the table. So after 10,000 Monte Carlo simulations, average evals needed 15.89, median 11, median cost per payout, average cost per payout. So even with that many trials required, we're still making 500 per payout running the statistical upon average. The median again is 16. So the more time cycles are ran, the closer they should get to median. So yeah, and keep in mind a cycle is just a single account. So this is discussing a single account. Okay. So here's our theoretical expected evals needed versus win rate. So the higher we get our statistical win rate, so again, we're talking Bernali trials, not a algorithmic win rate, right? The lower the number of eval accounts gets, right? So if I can approach a 60, that's going to drop from 16 down to 8. So that doubles, it halves my cost to go from 50 to 60% in those trials. Okay? This is expected theoretical cost versus that win rate and how it changes. So it changes exponentially the higher that win rate can get. So now we're going to look here. What I've done is I've uploaded a back test of the Evo Bear from TradingView. Okay. How accurate is it? I don't know. I don't need it to be perfectly accurate. I just need it to be close. Okay. So we've got it in here. You can use any back tests that you want in here. I just chose that one because it's what people are talking about at the moment, and I just needed something for an example. All right. We've got our profit target, our drawdown limit, and again, this is set as the blue sky 200K. We've got our sizes and our steps. Okay. So now we can go down here. We can run this thing, run the cell. Maybe he's wondering I'm in PyCharm running a Jupyter notebook. Okay. This tells you how many contracts are required past probability. And this is why I said this is not a best practice for your cash account or for any prop firm account that you want to treat as a cash account. To get to past probability, use a 50% using Bear. So that is, in this particular case, I want to pass in 1 day. I need to trade approximately 4 minis to pass in 1 day. And now I know there's all sorts of people saying that would have blown it, but let me present just the past couple of days here on the charts. I can go back to yesterday, and again, I will provide these to you guys. Hold on one moment while I change screens. I do have to go in approximately 30 minutes here, but we will finish this. I will use Jennifer's lovely, very colorful layout. Colors are somewhat difficult to bear. However, we'll do such. Show the screen. Okay. Q. And this is where our statistical edge lies. Okay. This is yesterday. Look at yesterday. It's a good example. If I'm running 4NQ, 1, 2, 3, passed account, 1 blown account. Over here. We've got 1, 2, 3 that may have passed. That might have gone high enough to blow it because it already had 3 wins. If you're on a static drawdown, maybe not a pass. This one, probably a pass. And again, I'm talking about NT, talking about using NT, where we don't have the delays. This is a blow. Okay, so we've got 2 passes, 2 blows yesterday, or there, excuse me. And we can come over here and look again, right? Win, that's probably a blow. Win, that may have blown. Win, that's a pass. Okay, this is what I'm talking about. I'm gonna stop streaming. Okay, so by exploiting statistical edges, we get ourselves accounts in quicker periods of time. If we come into this with expecting that things will blow, and yes, I'm aware there's consistency rules, that sort of thing. Look around at some of these prop firms that let you pass in one day, or you have to sit there, coin flip stuff, flip micros back and forth for a few days. What I'm talking about is very specifically the number of trials that are risky that you will have to undertake. Okay. So if you run into consistency, okay, now you're going to have to deal with that. 1 more trials, or change your sizing until it works right for you. Okay, I cannot give you exact advice. You're going to have to go and do the math on this. What I'm doing is giving you a framework of how you can pass these things and exploit prop firm payouts. Okay, this is how I believe prop firms should be used. Evals should be passed as quickly as possible. And then you should get through payout, of course, as quickly as possible and get to a payout. Now, how many people here use, how many people here have never gotten a payout from a prop firm and are currently trading more than 1 prop firm account, or you have in the past? Yeah. Okay. You need to immediately stop trading more than 1 account. Okay. A big reason why this works is we ladder stuff. Okay. If I can take 1 account, I can do this. Okay. I run it, it blows, another one, run it, blows, another one. Eventually, I get through the process, exploiting the statistical edge and get a payout. Now I've gotten a payout. Say my payout's $1,500. Okay. Now I can maybe run 2 accounts in the next one. Okay. And so on and so forth. You need to get to a payout first before you run multiple accounts. That's a big deal. Yeah, so the Apex 80 and 90% discounts, yeah, they want you to buy 20 accounts at a time and blow them all. They want you to do that. That's why they do that. Their 1 day pass thing does make this strategy a little bit more viable if you can hit nice runs, like the beginning of yesterday with Bear. It'll hit the nice run at the beginning of the day, or you get some nice stuff without any drawdowns in it. It should get close to that 50% coin flip rate, I would think. Now I need to sit there and do the math on it. I would think it would get close. Yeah, so those discounts are quite useful, but then you pay the activation fee after the discount. So don't forget to factor that in. But thankfully, you only pay it if you actually pass the eval. So on the coin flips before you pass the eval, you're not paying the extra cost. So this is how I personally believe eval accounts should be used. Prop accounts should be used. You should maintain your edge, which is limited liability. Okay? I hope some of this made sense. Sorry, go ahead, Travis.
Yeah. I was just going to say I agree with him 100%. And even if you look at the people that are just like in our Discord, like that have, you know, taken a good example was like Washi. You know, he didn't start with one account. He did start with a little bit more than 5, but I don't know if he already had payouts before that. That's what I'm assuming. But after he got his payout with 5 accounts, he was able to scale up to 10 accounts. Then he was able to scale up to 18, so on and so forth.
Right.
So it doesn't take a lot to cause that snowball. And then the other thing is trading. Trading. The other thing would be trading. Kind of finding something to exploit a prop firm. There's I used to do this. There's there's this whole thing with Apex where you would risk the whole account, right, to make $315 every single day. You do that for 8 days in a row, you get a $2,000 payout, right? And then if you ran the math, if you had a strategy and the math worked, you could just do that, knowing that you would blow accounts, but you'd make way more money on the payout side. In fact, they made a rule. I don't if you are aware, a couple years, maybe a year and a half ago, year ago, they made a rule that you can't risk the whole account anymore. Specifically because I wasn't the only one doing it, and it was hurting their, it wasn't profitable for them. So,
Yeah, man. They've got all these funny rules, and yeah, so the Apex trailing intraday DD makes this much more difficult. What you have to do to deal with that is you play the random numbers game. I want 2 or 3 of those just straight up or straight down trades in a row to pass. And then boom, that eval is done. I've got the next one already on deck. Boom, I hook that up with that one up in Quant Link. We go again. That's kind of what I'm looking to do. What I would be looking to do right there. If one blows, doesn't matter. They're like $30. Yeah, the end of day drawdown is definitely better. The static balance accounts are the best. They do have consistency rules, so you're going to have to do the math and see how the consistency rules might affect your sizing. So what you can do, and I will not tonight. I'm going to have to leave very shortly, but I will post all of this, the code for you guys, and you can play with it. You can take it, just take the code. You can, I know I say don't do this, but you can upload it to Chat GPT, and you can say, hey, bro, build some rules in here to deal with consistency or whatever the heck. And you can look at the numbers using whatever backtest you have for whatever strategy, and you can come up with something that works for it and gets you as close to that coin flip as you can get. And then you can look at the tables, or you can do the math for your own tables, and you can figure out, okay, I need to size at this amount to get to this level of win rate for my trials, so I can exploit this exact prop firm and account and get payouts for them. That is, guys, don't worry. This is recorded. Don't worry. It can be uploaded to, we have somebody, I think Paul has it, that you can upload it and it transcribes the stuff, the transcript. But anyway, this is what you got to do to deal with these prop firms. They're predatory, man. They're predatory. They're like, you look at the rules that Apex has, they are designed to fail you. They're designed to fail you. If you treat the thing as a regular trading account, they are designed to fail you. That's how they make their money, man. They set this up so that people are going to sit there, they're going to try to trade it like a cash account, and they're going to fail. That's how they design these things to work. Yeah, don't make it public. It's actually a good point. They design these things to take money from you in as predatory as a manner possible. We have to get smart with it. We have to put our mathematics together and understand, how do I exploit this very particular rule set. I hope I've given you guys an idea of what to do. I'm not saying use this exact sizing in these exact accounts, et cetera, et cetera. I'm giving you this framework to go do the math, understand how this works. And I'm sure plenty of people are going to come up with their own frameworks behind this. They're going to post them. So if you're somebody that loves doing this, go post it in in one of the forums. Post your own thread. Hey, this is the math I come up with. I'm doing it. Let's work it. This is the same thing as posting up settings for strategies and saying, okay, we're going to sit here and forward test this. You can forward test prop firms without spending any money. Did you know that? Get your account, get your demo account in Tradeovate. You can go into options and you can tell it to reset the balance in Tradeovate. Okay. You can forward test doing this without spending any money. That's what I recommend you do. Okay. Before you actually spend any money, you need to understand how this works. Okay. So we can all get together. Remember, I was saying this is a community, right? We all help each other. We all work together. We work together to learn and to make money. And prop firms are out there trying to exploit you guys. Let's exploit them back. Let's work inside their rules and take their money, because I am effing sick of them. Honestly, like, I'm sick of them. That's why people are like, hey, why don't you guys try a prop firm? Prop firms try to steal your money. I don't want to steal your money. I want to help you win. I'm not going to start a prop firm. So this is the,
it's something to tack on to kind of what you said earlier about sizing or position sizing in the very beginning of this webinar too, is that, like, if you go to Vegas, right, and you are a successful blackjack player, what's the thing that they come to the table and do to you is that they do something it's called flat betting. They flat bet you. They make it so you cannot increase and decrease your size for each hand that you have. There's a statistical edge in that alone. And the casinos already know this, and some prop firms already actually have rules in place, unfortunately, specifically for this, of, hey, you have to have consistent sizing for every trade. Again, that is taking away a statistical edge that people can use in trading. So,
yep. Prop firms, they're trying their best to stop people from making money, but we're not going to let them. So now what we got to do, we can take statistical frameworks like this, and you guys take these things. I know some of you will sit there and you're like me, you will sit there and you will nerd out on stuff. So let's go. Let's nerd out on stuff. Let's grab the rules. Let's grab our back tests and say, hey, this right here is exploitable. I found a part. I found something that's exploitable. I found a hole. Let's do this. Let's test it. Let's make it work. And eventually, QuantVue is going to become known as the prop firm killer. We're going to get rules made that are called the QuantVue rules. They're going to be named after us because we're going to take so much money from them. So that's my challenge to you guys that love to do this sort of thing. Get in there and figure this out. Figure out the mathematics with this, okay? Somebody once asked me, if I can make money with my algorithms, why do I license them to other people? Why don't I just keep them all to myself? Why don't I just hoard them, right? Like a dragon sitting on its gold and hoarding it, right? The answer to that, and it was actually, I had a phone call with Marcus, the very same Marcus that works with us. This was years ago. And he asked me, because he wanted to sign up and use my algorithms. This is years ago, not even a QuantVue. And he says to me, why do you let other people use these? Why don't you just hoard them? And I says, because other people, thousands of eyes on something, nets the best results. And you guys have found sets of settings in these that I never would have even thought about. Like, just constantly, you guys are finding things, and I'm looking at it, and I'm like, oh shit, that's actually a statistical edge that these guys found right here. Let's look at this. And that happens constantly. So let's do the same thing with prop firms. There's no reason we can't. Okay. So that's, yeah, exactly. Community sourcing, crowdsourcing, man. We're all just we're gonna get together and make this thing work. That's our community. We support each other, we help each other, we love each other. We all have suffered traumas together. We all have celebrated wins together, right? And we're going to keep going. That's what QuantVue is about. That's what we're about. So there we go. That's my spiel. I do need to leave. I can do. There's anything left you want to talk about, Travis? We can finish it up.
No, I mean, I think that, passing evals fast is something that, having some type of statistical edge is important, right? There's a reason why I know that 61 ticks on 10 contracts equals $3,050, because that's how much you need to pass a 50K eval in one trade, right? And if you can figure out how to do that, and where you have higher than 50% win rate, 70% win rate, then you can start to build stuff out on that. The other thing that I do, or, other thing that I think is important to know, is 21 ticks on 3 NQ contracts equals $315 a day. That's the minimum amount of trading days you need to take a full $2,000 payout out of an Apex account. $315 a day times 8, you can flip the last 2 days. So these are things that I think are important for people to know. Then you can start to build strategies around that for sure.
And see eventually what we can do. And here's one of the pieces of the puzzle. Eventually, we can create for 2.0 a set of rules that people can select and use. I want to make this many ticks per day, stop it here to avoid consistency, or when this account is passed, go to the next. When this one blows, Quant Link, go to the next. And it just sits there and bangs them out. That's where we're going. But I need everybody's help to get this done. Okay. I am one dude. There's only 24 hours in a day. Were there more hours? That would be amazing. There's only 24. Okay. I need everybody else's help. We can get on this. We can all look at these prop firms. We can find these places to exploit, and we can build out the tech, and we can do it. Okay.
Yeah.
So
Yeah. There's definitely more power in numbers, y'all. So,
yep. 100%. All right. Thank you, everybody, for coming. I really appreciate it. I love all you guys, even though I sound like kind of a dick when I type. I do love all of you guys. And I only wish the best for everybody in this company, everybody in this Discord. So, hey, you guys all have a great evening. Love you. We'll talk soon.